Hey, what's up, y'all? Subscribe to my channel, hit the like button, watch my recent videos, share my channel also. I'm gonna give y'all 5 stocks I'm gonna trade my way out of. These 5 stocks in my portfolio. They were great companies at once, but I'm gonna give y'all and chart everything a year out to show you why I am trading out of them. All of them pay a decent dividend, but the juice not worth the squeeze as far as holding on to them. And after the interest rate cuts and the market squeeze back up probably next year, once I get in the green, I'm gonna get up out of these 5 stocks. Let's go, man. Subscribe to my channel, hit the like button, watch my recent videos, share my channel also. Number one, Wendy's, ticker WEN, trading at $8.67. I am getting out the food sector. I am done with it. I sold my McDonald's. I seen the day that Pepsi starting to go up. That's another stock I might exit out of. I done sold Coca-Cola. Anything got to do with food outside of being a grocery store like Costco, Walmart, or Kroger's, I am out. BGS Foods, when they go back up on the run, I'm going to get out of that stock also. Anyway, that should have been on this list, but don't worry about it. Wendy's trade 52-week low. Y'all see this? $8.56. The low today, $8.56. This thing been making a new low every week for the last month, seem like. We can go out for the last year. It's down 53.44%. Thing is down $9.95. I used to swing trade this thing every day. It's to stay in like the $19 range. You could have traded it, brought volume, and made like 50 cents a share a day. Thing had crazy trade volume. You see 6.99 million. I'm going to call that 7. P ratio 9.03. This thing could go on a little run and squeeze. The problem is you're going to have the dollar cost average to get up out of this anyway. It did cut its dividend. Got a market cap right now, 1.65 billion, 6.46% dividend yield. Like I say, I'm going to trade myself out of it. Am I buying it now? Yes, I am. The dollar cost average down. When this thing squeeze, I am out of this. Analysts got this as a what? As a whole. Like I say, man, I'm done with just dealing with the food sector. Anyway, number one, I'm going to give y'all right there. That is Wendy's. Number two, LYB. Lionel and Basel. Why? Trade at $46.10. In the last month, this thing down 5 days is down $2.41, 5%. Last year, 50.67%, $47.52. It was a $93 stock, man. 93.44%. $93.44, I'm sorry. 52-week low, $44.89 with a high of $93.10. Dividend yield 11.84%. That's the only thing good about it, the juicy dividend. Now, if you keep this and just reinvest your dividends, you might come out better if it does do a squeeze, but that's the problem. That's a big if. 4.89 million trades, does get a lot of trades a day. Decent market cap. Like they say, this is another one dealing with the chemicals. The Dow, the one I just did, also dealing with chemicals. I've noticed everything with chemicals is getting crushed. So the Dow is another one. Lionel Basel. It's another one I'm about to get out of. DEA. It's a REIT. They rent out government properties to the government. Down 35.83% for the year. $11.88. 8.45% dividend yield. They got nice yields, but man, you about to suffer with price depreciation. A lot of REITs are getting beat up now though, but now they got all these covered call ETFs out now. And so if you're looking for cash flow, you really don't have to buy REITs like BDCs. You can deal with the Yield Max ETFs or the Defiance or what's that other one? The Neos funds, you can deal with those now. Probably it might take less risk, to be honest, because a lot of people are going and selling stuff and putting their money in those places, so their trade volume is high, man. You always want to be where the fastest moving car is with all the trade volume. This got an average volume of 505,000 trades a day, which is not a lot. Market cap 1.08 billion. See, got a juicy dividend, 8.45%. PE ratio 56.03. Like I say, 52 high, 36.31. Upside about 15 a share if it can go back there. Once the interest rates and stuff get cut. Another one I'm making my exit out of. Well, the Dow, Wendy's, Lionel Basel, DEA. The Dow. There's another one. Come on, man. What is you doing? Dow. Let's go. If y'all watch my daily live trades, y'all see me buying this stuff, just the dollar cost average on in. But trust me, I'm going to let y'all know when it's time to go. Dow, another one, trading at $21.33. Look at the last year. Down 60.17%, $32.36. I could have put all this money in Amazon or something in the Magnificent Seven. Been doing way better. All right, $20.40, 52-week low, 52-week high, $53.56. Upside of what, $32 a share, 6.54% dividend yield. Paying 35 cents a share quarterly. They cut their dividend in half. They was paying 70 cents a share quarterly, so they might get some growth now. It might be turning the stock might turn around since they did a dividend cut. P ratio still is nothing. They got a dividend payout ratio of 700%. That means they're using 700% of their profits to pay dividends out to share. 700% of their profits to pay dividends out to shareholders. Trying to word it right. 15.03 million. Got a lot of trades a day, but it just don't go up. It's trading down. So everybody must be selling. All right, that's the Dow, DEA, Lionel Basel, Wendy's, and another one, Western Union. The ones on my list and on my tongue right now as I'm doing this video. Western Union, ticker WU. Y'all know who this is. The financial sector, the money company, money transactions. Another stock I used to swing trade a lot. Last year down 31.31%, down $8.71. They moved the price target down to $9 last time I known of. $7.85 is the low, high $7.95. This is actually a nice stock to like swing trade. If you can catch it right now, only buy it at $8 and under mark. I don't touch on this. It is above. This might be the best stock out of the 5. If I had to hold one, it'll be this one. Market cap $2.63 billion. Dividend yield 11.55%. You're not gonna get no dividend growth out of this one, and you might not get a cut because they've been paying a consistent dividend of what they pay 20 something, not 25, like 24 cents a share or something like that, somewhere in there, 24.5 cents a share a quarter. But trade value 10.226 million. This is actually one I would like to trade. I'm gonna swing trade and buying at $8 and under 9. Once it go to $8.50, I'm selling all the stuff I'm buying. The rinse and repeat, the lower my average cost. Looking at last month, got up to $8.40. Last 6 months, it always get up to about $8 something, $9 and come right back down. That's how I'm about to play it. I can get in there at $7.90 something. I can ride it up to $8.84 something. I'm selling it and getting rid of it. Rinse and repeat. It seems like that's the pattern it's in. Wendy's gonna be another one I'm gonna do it with. But this is an attractive yield. If you want to just reinvest the dividends in this, that'll be fine too in this play here. It might can go up. Like I said, they had a price target of $9. See, raising price target to $9. They lowered it to $8. Now they raised it, to 9. So if there was a stock I had to keep, it'd be Wendy's out of all the other 4 out of the 5. But I'm just gonna get out of this one here too, man. It's not worth holding on to, worth the risk. If I had to deal with the financials, I'd rather go right now with SoFi or really with Robinhood, to be honest. But yeah, just been getting beat up, man. This went from a good stock. Always been a dividend play, but yeah. Then dealing with the credit services, man. I just put this money in a Capital One. That's one I like now. I always got Visa Or I can just put in XLF, the financial ETF, and get that little 2 to 3% dividend yield every quarter, 2.78 or 2.5, whatever it is, and let it ride up because it never goes down. But these are stocks I'm dumping, man. Signing off. Go get your money.